What's going on, guys? Today I want to give my thoughts on the housing market and how to move forward. So, obviously, if you've been watching the news for the past couple months and you haven't been living under a rock, you know that the interest rates are rising, right? I just Googled what the interest rate is today on a 30-year fixed mortgage, and it's 6.75%, right? That's pretty high, right? Like, I bought my I got a single family home during COVID, and my interest rate was 2.7%. On my 26 unit apartment complex, my interest rate about the apartment complex about a year and a half ago was 4.25% interest, and I actually just got a hard money loan on a my 20 unit apartment complex, and the interest rate on that hard money loan was 9% interest only, and that was back in May of 2022. So literally, the 30-year fixed is almost 7%, which is almost, it's only 2% less than my hard money loan. So, as I mentioned, there's a high rise in the interest rates, and it's making real estate a little bit more unaffordable, right? Like a lot of lenders, they base the value of an apartment complex, mobile home park, self storage, any commercial real estate based on the debt service coverage ratio being greater than 1.25. And obviously, if you have a 7% interest versus a 5% interest rate, it's going to make it harder to meet that debt service coverage ratio of 1.25 or greater, right? So that's kind of because of the rising interest rates, it's turning away a lot of investors um, in terms of the housing market, right? And the next piece is, low inventory, right? Like despite rising interest rates, home prices aren't going as much as they were, compared to a year ago, but there's still a lack of inventory, right? Like people need a place to live, they need an affordable place to live. And just due to the, low inventory, so supply and demand, right? There's still low supply and high demand. So as nature of the beast, the rents are still rising, right? Like even during the 2008 crash, rents were still rising, and we're still seeing it today, right? It may not be rising as fast as it was during the heart of COVID, but it's still rising, relatively speaking. There. So, due to the low inventory and, home builders cannot build houses fast enough due to, the labor shortages and supply shortages. So, low inventory will be around for a while. So I guess with these two thoughts, like people are asking me, "Hey, Steven, like, what are you doing during this time?" And or what would you do during this time? And to be honest, um, this actually makes it more ideal of a market. During most of COVID, it's always been a seller's market, right? Like you could put a deal on LoopNet and have 100 investors give offers, and you do best, best and final, another round of best and final, another round of best and final, another round of best and final, and by the time it got to the end, the deal was way overpriced and just didn't make sense to me, right? So, for me, I my investment strategy works regardless of whether it's a hot housing market, whether it's a recession, whether there's inflation, whether there's a high inventory, there's low inventory, low interest rates, high interest rates, whether it's a buyer's market, a seller's market. And how I do that is I just go off market, right? Like I go I find off market deals. My both my apartment complex and my mobile home park I found off market using a direct mailing campaign. For those of you who are interested, I actually have another YouTube video talking about my direct mailing campaign, but at a high level, I basically use PropStream, in terms of getting my data, and I use Yellow Letters Complete in terms of outsourcing my mailing campaign. If you're interested in either of those, check out that video or check out the description down below. I have links for PropStream as well as Yellow Letters Complete. But what I do is I basically send out 300 letters per month for about 6 to 12 months, and I go direct to owner, right? So I don't want to depend on a broker bringing me a deal. And to be honest, I haven't had a broker bring me a good deal to date. And the reason for that is because they're pitching the deal to, like, 100, 200 investors, and they just create a bidding war, right? Because the broker gets paid based on a 3% commission. So the higher the sales price, the higher their commission. And even if the broker tells you it's off market, it's not truly off market. That just means that it's not posted on LoopNet, but they're still pitching it to like their Rolodex of investors. So it's not truly off market. There's still a lot of competition, and I don't like that, right? I don't want to be competing with 100 other investors. That's why I go direct off market, because I'm only competing against myself, right? It's just more about going direct to the owner, I can negotiate with the owner directly. I can understand their pain points. I can understand their seller motivations. I can pitch, creative financing more likely. And like I said, I'm not competing against other investors, so I can take my time, right? So that's why I would recommend to learn how to go off market. So you're not dependent on whether it's a buyer's market, a seller's market. Obviously, during a seller's market, it's even more important to go off market. But during a buyer's market, the owners know that, like, hey, um, the market's not as hot, so maybe I'm more willing to work with this guy. So it actually makes going off market even more effective during a recession, right? During a buyer's market, because they know that, like, oh shoot, like I actually like working with this guy, and it's not as hot. Maybe I should unload this property. Like, the owners have fear, right? They have fear that they want to get rid of this property before it crashes. So you might be able to negotiate a better deal, right? So during this time period, in my opinion, it's the most important time to learn how to find off-market deals, right? And then in my course that I created, in the community that I'm creating, I emphasize go off-market. Like, I have a system to teach a course that I created on how to find off-market deals, how to negotiate those deals, and how to negotiate creative financing. So that leads me to my next point. Like I said, during this current housing market, it's very important on how to learn to get off market deals. The next critical point is learn how to do creative financing, and off market deals and creative financing go hand in hand, to be honest. They go hand in hand. So, what is creative financing, right? So, creative financing is seller financing, right? And seller financing only works if the property is owned free and clear. And what's nice about my direct mailing campaign, like, who do you think I try to target with my mailers? I want to target people who've owned the property for a long time, 20 plus years. Most likely the property's paid off. Most likely, it's a baby boomer who wants to retire, but they still are used to getting that consistent income. At that point, once you build that trust, once you build that relationship by working direct with the owner, you can negotiate seller carry first. And what is seller carry first? Seller carry first is the owner is acting as a bank, right? So you don't have to involve any lenders whatsoever. So what does that mean? You can close faster with less headache. Number two is that you can negotiate your terms, right? With creative financing, you're not held to that 7% interest rate that banks are quoting me. You can negotiate whatever interest rate you want with the owner, right? You can negotiate your down payment. You can negotiate your terms, right? Like, is it fixed for, um, whatever, 7% fixed or 5% interest only? How long is the seller financing agreement going to last? Is it 5 years, 10 years, 20 years, 30 years, right? So everything's negotiable. The down payment, you can break it up, right? Let's just say it's a 25% down payment or 20% down payment. You can do 10% at the close of escrow and 10% at year one. Or if it's 20% down payment, you can do 5% at the close of escrow, 5% year one, 5% year two, 5% year three. Everything is negotiable with creative financing. That's why I love it, right? And for me, I emphasize in my course and my mentorship the 10-5-5 rule. So 10% down, 5% interest only for a 5-year term. And that's just your starting point, right? Obviously, you can get 0% down. You can get 4% interest only. You can do a 20-year term, like whatever it is, right? You have to build those terms based on the seller motivation, the seller situation. So, like I said, you're not buying real estate, you're buying situations. So, and then another form of creative financing is subject to, or master lease agreement. So, basically, subject to is they still have debt on the property, and basically, you're just going to make payments to the owner, and then the owners will continue making payment to their lender, right? So, that's what subject to is. And it's usually used when maybe the seller is in a more distressed situation or the asset is distressed. All right, so that's when subject to or master lease agreement would be a better option. But like I said, just if you can master generating off market leads and negotiating creative financing, you will dominate during this recession, right? Like, you will find so many deals, great deals now, because like I said, it's shifting more towards a buyer's market because they know, owners know that interest rates are going up, that housing prices are cooling off or going down. So because of that, they're more likely to negotiate, right? Versus like a year ago, it was a seller's market, so they knew, okay, well, whatever, I want this much money, take it or leave it, right? So um, that's what's nice about learning going off market, but also creative financing. Like, with creative financing, I always pitch a thing saying your price, my terms. Like, I'll overpay for an apartment complex by $1 million. I don't mind doing that, but you better give me 0% down, very low interest in the long term, right? Because like for me, at the end of the day, all I care about is my cash flow, right? Well, what am I cash flowing on a monthly basis, and what's the upside for me, right? Like I don't mind overpaying a property by $1 million, but if I'm still cash flowing, 10% cash on cash return, but also the rents have upside of raising by about, $100, $200 after some renovation. That's great, right? So that's the beauty about mastering generating off market deals and doing creative financing. And if you check the description down below, I have my course. I have an A through Z system on how to not only teach you how to underwrite apartment complexes quickly, but also how to generate off market leads through a direct mailing campaign. But more importantly, how to negotiate these owners, right? Like a lot of people, direct mailers, a lot of people are doing it, to be honest, but how you win the deal is through negotiations and building that trust. And that's what I emphasize a lot on in this course. And then lastly, it's doing creative financing. And number one, understanding when creative financing can be used, but more importantly, explaining creative financing to the owner, right? Because if someone doesn't understand something, they're quick to say no to that. So I spend one whole module talking about creative financing, and you can get a preview of that by checking out one of my other YouTube videos where I did a whole masterclass on creative financing to teach you the basics, right? Like I said, the concepts are very simple for both off market and creative financing, but the key is getting the seller to understand it. That is how I was able to scale to 90 units rapidly, and probably how I'll continue to scale moving forward. But like I said, once you learn those concepts, it's gonna be very powerful. So to kind of summarize everything, once again, I don't really pay too much attention to the housing market. Obviously, I don't live under a rock, so I know interest rates are going up, inventory is still low, but that doesn't change the way that I buy real estate, right? Even during a hot market and a cold market, I always would do off market deals through direct mailing campaign. I'll always try to pitch creative financing, right? Because when you go off market, I've been able to get deals way under market appraised value. My 26 unit, I got it for $250,000 under appraised value. My mobile home park, I was able to get that via creative financing with 10% down only. So, like I said, I just love the benefits of going off market and creative financing. That regardless of how the interest rates are, like the interest rate 7%. Like I said, my seller financing is at 5%, so I negotiate lower than what the banks are offering. Um, so, you have a lot more control by going off market and pitching creative financing. So, like I said, regardless of the market, I go, whether it's a hot market, cold market, I learn to get off market deals and pitch creative financing. So once again, check out the link in the description down below, and please support the channel by liking, subscribing, and please place a comment. Thank you so much, and see you in the next one.